Gold traded in the no trade zone so far for the day, but with the modest bullish bias, it has shown very good restraint to break below 1944-42 zone so far. At the same time, on the upside, 1948.50 proven out to be a greater resistance. While if you look at US crude oil has dropped towards 78 and now it's getting a stronger support at 78 level. Now, what to expect from gold and crude oil with the US session? Yes, gold may also show volatility with the CPI data coming in from US. Yes, this data is going to be watched critically because the next rise will depend, the next interest rate hike will depend on the data today, mostly on the data today. So how to profit trading gold and crude oil, we will see with the help of charts and indicators. If you are not subscribed to the channel, subscribe to the channel and stay tuned with the latest updates. This is the second update. Now, if you look gold on the early chart, see after the rise, it is just staying within the zone, willing to give a breakout. In general, after the trend, it follows the breakout in the same direction. But yes, we have to stay watchful, and if it stays below 1942, we can stay short. Rather, I will say, see 1944 itself has given it a very good support. Thus, you can try it out by selling at 44, but with an extreme caution because 1942 and 38 zone is going to be a very good support for the day. And remember what it has done, rise consolidation, and if it gives a breakout, it is going to be a sharper one. At the same time, breaking beyond 1950, yes, that is a point at which we can recommend you to buy, but then 54 is the first resistance and 60 levels it needs to break past by in order to confirm further rise. Let's have further detail looks. Is stochastic near to top, MACD willing to converge, crossover. Last time it has converged at this point and it has seen a good fall. Again, it is at the same levels. RSI flat, coming to 2. Now, likewise on the 2-hour charts, after the rise, it is just consolidating, neither willing to go up nor willing to go down, waiting for the data to come by. And with the data, possibly it may give a breakout. And which direction it's gonna be? See, if as far as it stays between this channel is still having the highs at around 1954. Thus, as long as 1954 is there, we have to be watchful. Yes, beyond 1950, we can initiate a buying position, but with caution. As it has to break past by 54.55, then we can see it landing towards 60, and beyond that, sky is the limit. If you look at the 2-hour charts here, see higher lows, higher highs are seen. And here, if you look at lower highs are observed here. Thus, it is consolidating. It has to come out of this zone. The stochastic retrace, MACD is in green, RSI flat. Coming to 3-hour chart, likewise on the 3-hour chart, see bottom there, first green candle, consolidating here, waiting for the breakout. Possibly, if you look at the previous 3 candles, see higher lows are seen, higher highs are seen, but it needs to break out beyond 1950 levels in order to confirm further rise, and 1954-55 in order to confirm the bullishness towards 60 and plus levels. Yes, it can rise towards those levels. At the same time, one must not forget, as long as 1950-54 levels are respected, there is still a probability for it to continue in this downward channel. Remember, it is still in this downward trending channel. Stochastic looking down, MACD is divergent, MACD is bullish looking upwards, RSI is looking upwards as well. Coming to 4-hour, similar observation on the 4-hour charts, higher highs, higher lows, preceding candle with a smaller body. It suggests that the bulls are not willing to take it on the upside, keep it bullish, and possibly it can show a down move before rising. That is also one of the probabilities to eat out the stop losses. It can try to move towards 38-40 zone. Only confirmation of bearishness is once the price stays below 1935. This is the support zone. If you see gold staying below the 1935, we can say 1930, 1925 levels can also be expected. Yes, see what has happened here, prices were divergent from the moving average, it has converged towards the moving average. Now 20 period giving it a good resistance so far. Once it stays above 20 period, certainly it will try to move towards the 50 and 100. But if you look at 50 and 100, it has crossed over and trading with divergence. This is a bearish sign. It has come after a long bullish move. Thus, it may continue for a while on the downside. Stochastic near to overbought, MACD. Now, interestingly, MACD after forming double bottom is looking forward to a rise, trading with little divergence, looking bullish. RSI flat, coming to the day. And before I come to the daily charts and give you the trading levels and strategy, if you want to learn this art of trading, you can join my mentorship batch. The 27th batch is starting on 20th of November. Register yourself now itself. Understand the tools, techniques, and concepts which can help you identify profitable trades and trade profitably. Reach out to me for more details. To register for the batch, you can visit my platform forexfunder.com. It has much more than just the information about the mentorship batch. Yes, here if on the front page itself, it is featured. You can find the details, curriculum, timing, and also the payment options here are available. You can fill in your details, proceed ahead with the payment, and book your seat now itself. Also, where to check the CPI data, you can just explore this tab, economic calendar, where the data from across the globe is available and it is a live data. Also, you can check for the charts here in the markets tab. You can find out your favorite instrument, check for the charts, and do your own analysis. Also, you can schedule a call with me if you want to get any guidance or consultation with respect to any existing position or a futuristic position. Also, the important part is the communities tab, where you can discuss with the like-minded traders. And yes, my weekly webinar is can also be registered there itself. You can book your seats for the webinar as well on the platform forexfunder.com. If you want to join my Signals channel, reach out to me via Telegram or email for my VIP Signals channel. Now look at gold on the daily. See, gold on the daily charts, you will find the drop there, the retracement, couple of retracement candles. This is a weak beginning candle and it is a stepping stone. Since then, we have seen lower lows, higher. If you find the prices here, you will observe 35 levels. First 38.42, this is the first resistance zone, then 34.35, this is the second zone. These two levels gold has to breach, and if it stays below, you can say that the bears are back and we are going to look forward to a massive drop towards 1925 level. See, couple of drop, retracement, then drop, then retracement, and it can continue with the down move here. It can continue this formation here towards 1925. There is a probability, but then I will only recommend you to sell. See, at 44 you can sell, but this is a riskier proposition. As long as 38.42 is respected, this is the first resistance zone, and then 34.35, these two levels it needs to break pass by in order to confirm the bearish there. On the upside, you can buy here at 1950, but wait for it to break beyond 54.55. Beyond 54.55 is where the bulls will take over. Thus take your positions accordingly. Now let's say we look at crude. If you look at crude oil on the early chart, see 78.5, there is a strong wall which is there at 78.5, 78.6. This was the only level where I have recommended you to buy today, and in fact 78.8 levels for the buying entries. It has respected the levels so far. On the downside, now 78 proving out to be a great support. Below 78, we can expect 77.6, 77.5. This zone completely is a good support for crude oil, and then 77. It is only bearish. If you see it is staying below $77 levels, you can say that oil has turned bearish, else it has still got the bullish momentum. Now, so this can retrace towards 77.5 or 77 levels. Even if it has to rise, it can try to retrace. Also, if you look at see what has happened, you can track this. This is the formation here, thus 77.4, 77.56 zone, very strong support exists. Stochastic looking downwards, MACD has crossed over, trading with divergence, looking bearish. It can try to continue with the downside move for a while. RSI has dropped as well. Coming to 2 hour, on the 2 hour charts, likewise, see there is a downward push, there is a downward push, support is intact at 78. It has to stay below 78, then 77.8, 77.46. As long as 77, this see, as long as 77, I will say very strong support exists for crude. Thus, if you're selling at 78, you have to be cautious and alert. It has got good supports. Just put a 20 cents trailing stop loss on the downside. Stochastic at bottom, MACD is crossing over for a sell here, and see it has seen a good rise before, now trying to cross over for sell. RSI near to top, coming to on the 3 hour charts. After forming this top here, first red candle, second red candle, is staying below 78 levels. It can give you the third increasing bearish candle, and from here it will try to form this castle towards 77 levels. Thus the chances of bearishness still prevails. We can expect it to drop a little if it stays below 78, 77.8 levels. And how far? 77.4, 77.6 first zone, 77 the next support zone. Two very strong supports here. Stochastic has dropped, MACD is willing to converge, crossover for sell. RSI is almost flat. Coming to 4 hour, likewise on the 4 hour charts, forming the support here, and it is staying. Once it breaks below 78, 77.8 zone, certainly more bearishness to prevail towards 77 levels. As long as 77 is intact, do not treat oil as bearish. That is also equally good. Stochastic dropping here, looking downside. MACD has traded with divergence and bullishness. It can possibly converge, crossover for sell. RSI is staying flat. Coming to the daily. Now look at daily charts. See, on the daily charts, oil has stayed in this channel for a while. And if you look at, see, suddenly it is respected, or it has created this bearish channel. Thus, it has to stay above $80 levels in order to confirm a reversal. As long as 80 is not breached, we cannot treat this as a reversal. Now, what is happening today? See, couple of bullish candle, one red candle, then another flat candle with bullish bias, and now this is again with a flat top. So it is trying to retrace a little. Possibly, even if it tries to retrace, I do not see it breaking below 77, because below that it should turn bearish. It can try to yield a half side, possibly towards 77.4, 77.6 zone. That is the max it may try to retrace. At the same time, if you see it is staying beyond 78.6, you should initiate a buying position at 78.6 and expect it to rise for 79.2 and then 79.6, 80 levels. Yes, it can try to move towards 80, yield a second greener candle, but only buying a position is at 78.6 levels. Thus take your positions accordingly. Buy at 78.6, sell at 78 levels here. On the downside, be very cautious. As long as 77 is respected, it can bounce back, it can reverse. Hence, you have to trade with a trailing stop loss of 20 cents. On the upside, 79, 79.2 is the first target and a good resistance zone. Beyond that, 79.6 and 80 will be seen there. Take your trades accordingly. Have a great profitable trading day ahead. See you again tomorrow with the Asia and Europe session update. This is the second update for the day. Do like, share, subscribe and comment. Join my mentorship batch, join my signals channel, join my live webinar. And yes, all the updates are available on my free Telegram channel and my platform, theforexfunda.com. Join both. Thank you very much.